And now I continue on to give you a presentation on capital budgeting and long-term financing in international context, an example. Information about property. This beautiful Mediterranean style property has a gorgeous open courtyard which is built in 2004 and is also located at 1342 North Highland Avenue, Los Angeles, California. The listing price is 6.2 million. The unit amenities: polished concrete floors in living areas, stainless steel countertops and appliances in all kitchens, dark mahogany kitchen cabinets, handmade wrought iron railings, hardwood floors on stairs, washer and dryer in each unit, pre-wired for high-speed internet and cable. All units have a balcony or patios. All units have separate office area. Some have additional loft space. This is the current annual operating data. This table gives you the gross income, vacancy rate reserve, gross operating income, and the expenses. This also specifies the percentage of the gross income. Assumptions. As it is mentioned on loopnet.com, the total value of the property located at 1342 North Highland Avenue, Los Angeles, California, consists of the building value ratio of 0.67 and land value ratio to 0.33. The apartment building will be fully depreciated over the next 20 years at the rate of $151,055 per year using a straight line depreciation. The apartment building will be sold for $6,820,000 after 7 years. This is the cash flow from operations, followed by the cash flow from financing, and not to mention the cash flow from investment. Tax analysis. In this table, tax analysis, you can see how tax expenses associated with the project are calculated. You can see that the depreciation and the interest rate on loans lower the taxable income and thus the lessen LAM's income tax expense. This has an effect on the project's cash flow from operations. As the tax expense decreases, cash flow from operations increases. Internal return rate, IRR. The calculated IRR in the project is expected to generate a 9%. As you can see, this number depends only on the project cash flows. IRR of 9% simply can be interpreted as follows. LAM should be equally willing to accept or reject this investment opportunity if the expected discount rate of the project is 9%, because the project's future cash flows would just offset the initial cost of the project. It means that LAM would not gain or lose if the project was undertaken. Cost of equity, 15.38% in USA and 12.31% in Japan. Cost of debt. Ignoring taxes, the cost of debt is simply the borrowing rate. In this table, you can see the assumptions made regarding the interest rate on loans from US and Japanese bank. The cost of debt is calculated to be 3.308%. Cost of preferred stock. The cost of preferred stock is equal to dividend yield on the preferred stock. If the Japanese investor requires 5% annual dividend, it means that 5% is the cost of preferred stock. WACC. As the project is assumed to be financed with 10% equity, 10% preferred stock and 80% debt, the WACC of the project is expected to be applying the cost of equity of 19.42% using the information from US market, which is coming up to 3.785%, and applying the cost of equity of 11.44% using the information from Japanese market, The value of WACC is coming up to 3.63%. Net present value, NPV. At the discount rate of 4.16%, the NPV of the project is $926,000. Positive NPV means that the LAM should accept the project as the sum of the present value of all projected future cash flows would exceed the initial cash outflow. The discount rate of 4.16% is used to discount the expected future cash flows back to their present value. Then the present values of all future cash flows are summed together and the initial investment made by LAM is subtracted. Recommendations. As the calculated discount rate is just lower than the calculated internal rate of return, the project should be accepted because it could cause the NPV of the project to be positive. In other words, the project's expected future cash flows discounted back to their present value would more than offset the initial cost of the project made by LAM. The ratios determine that the project profit would be just marginal. Accept the project would be my recommendation. Now this brings to the end of my presentation. Thank you.